नमस्कार दोस्तों, वेलकम टू एसबीआई सिक्योरिटीज़ मॉर्निंग पॉडकास्ट। इस पॉडकास्ट में हम बात करेंगे रोलोवर्स के बारे में और डिस्कस करेंगे मेन सेक्टर्स के बारे में जो कि फोकस पे है। इन द December series, the Nifty futures witnessed a pullback rally in the first half of the month and it marked a high of 24,930 level. Thereafter, it resumed its southward journey. This was the third consecutive series where the index has delivered a negative return. The Nifty index futures rollover stood at 77.66%, down from the 79.34% last month, but higher than the 3 months average of 76.62%. The number of shares rolled dipped to 120 lakhs compared to 128 lakhs last month. Moreover, the rollover cost surged to 0.72% as compared to the 3-month average of 0.65%. The Bank Nifty futures also witnessed a pullback rally in the first half of the session. However, it failed to cross the 54,000 mark and thereafter witnessed a sharp correction. Currently, it is trading below its short and long-term moving averages. The rollover for futures stands at 67.81%, lower than the last month's 76.82% and below the 3 months average of 71.33%. Additionally, the rollover cost has increased to 0.73% compared to the 3 months average of 0.64%. The market-wide rollover stood at 90% compared to 91% last month. In the latest series, the FII index positions reflect a long-short ratio of 18.41%, signaling a cautious stance with higher inclination towards shorts. For the weekly series, a notable call open interest is observed at the 23,800 strike, followed by the 24,000 strike. Meanwhile, on the put side, the open interest concentration is witnessed at the 23,700 strike, followed by the 23,500 strike. अगर हम क्रूशियल लेवल्स की बात करें, द जोन ऑफ 23,550 टू 23,500 एक इमीडिएट सपोर्ट का काम करेगा इंडेक्स के लिए. Any sustainable move below the level of 23,500 will lead to a sharp correction up to the level of 23,200, followed by 22,900 in the short term. On the upside, the zone of 23,950 to 24,000 will act as a crucial hurdle for the index. Any sustainable move above the level of 24,000 will lead to a sharp pullback rally up to the level of 24,300, where 50 and 100-day EMAs are placed. The India VIX, a measure of market volatility, has oscillated in the zone of 16.88 to 12.47 level. Due to the narrow range, the moving averages have started losing their curvy nature. Going ahead, the zone of 16 to 16.2 will act as an immediate hurdle for the India VIX. Any sustainable move above the level of 16.2 will lead to a sharp upside rally up to the level of 17.5, followed by 19 in the short term. While on the downside, the zone of 13 to 12.7 level will act as a crucial support for the index. Tracking the market breadth with respect to single stock futures, 85 stocks comprising 39% of the derivative space stocks concluded on a positive note. Conversely, 131 stocks representing 61% closed negatively. This suggests that the market experienced an overall bearish sentiment during the November series. In the derivative landscape, only 13 stocks have marked gains surpassing 10%, while 25 stocks have experienced increases ranging between 10 to 5%. On the flip side, 12 stocks have seen declines exceeding 10%, and 40 stocks have registered decreases within the range of 5 to 10%. Tracking seasonality over the past 17 years, the January month has often exhibited a negative trend for Nifty. On 11 occasions, the index has concluded on a negative note with an average loss of 4.79%, while on 6 occasions it has ended on a positive note with an average gain of 5.67%. The average return for Nifty in the January series has been minus 1.10%. Over the past 17 years, January has consistently shown an average volatility of 9% for the Nifty index. Historically, Bank Nifty has shown a negative trend in January over the past 17 years. Out of these, it closed negatively 10 times with an average loss of 7.17%, while ending positively 7 times with an average gain of 8.51%. The average return for Bank Nifty in the January series has been minus 0.72%. However, Bank Nifty has demonstrated an average volatility of approximately 12.70% for the past 17 years. The potential outperforming sectors based on the rollover data are IT, healthcare, pharma, realty, and consumer durables. And the potential underperforming sectors based on the rollover data are automobile, FMCG, oil and gas, metal, CPSE, energy, and media. That's wrap of today's edition of podcast. Thank you for listening. Do tune in tomorrow for more such market updates and insights.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.